AT&T Incorporated Q3 2025 earnings call summary. Good morning, and welcome to AT&T's third quarter 2025 earnings call. Today's call covered solid operational performance and reiterated full-year financial guidance, with management expressing confidence in their strategic direction and ability to execute on future growth initiatives. Key financial metrics and performance. Consolidated revenue grew 1.6% year-over-year. Adjusted EBITDA grew 2.4%, with a 30 basis point expansion in adjusted EBITDA margins. Adjusted EPS, reported at 54 cents, consistent with the prior year. Free cash flow reached $4.9 billion in Q3 2025, up from $4.6 billion in the prior year. Capital investment stood at $5.3 billion, a decrease of $200 million year-over-year. Shareholder returns returned $3.5 billion to shareholders, including $1.5 billion in stock repurchases, on track for their $4 billion full-year target. Net debt to adjusted EBITDA improved slightly to 2.59 times from 2.64 times last quarter. Cash position exceeded $20 billion. Business unit performance highlights. Mobility delivered over 400,000 postpaid phone net adds, slightly ahead of the previous year. Mobility service revenue grew 2.3% year-over-year, with EBITDA growing 2.2%. Postpaid phone churn was 0.92%, up 14 basis points due to increased marketplace activity and device financing normalization. Postpaid phone ARP was stable year-over-year, influenced by success in underpenetrated segments and growing converged customer relationships. Management is confident in achieving full-year mobility service revenue growth of 3% or better and mobility EBITDA growth of approximately 3%. Consumer wireline achieved its highest total broadband net adds in over 8 years, with over 550,000 new subscribers to AT&T Fiber and Internet Air. Total revenues grew 4.1% year-over-year, driven by a significant 16.8% growth in fiber revenue. Fiber subscriber base surpassed 10 million premium AT&T Fiber subscribers. AT&T Fiber households now also subscribe to AT&T wireless services at a 41% rate, a growing trend. AT&T Internet Air saw 270,000 net adds, doubling year-over-year. Consumer wireline EBITDA margins expanded by a robust 350 basis points. Full-year expectations remain for consumer fiber broadband revenue growth in the mid to high teens, and consumer wireline EBITDA growth in the low to mid-teens. Business wireline revenues declined 7.8% year-over-year, with EBITDA down about 13%, as the company continues to manage through legacy service declines. However, fiber and advanced connectivity service revenues grew 6% year-over-year, an acceleration from the previous quarter. Full-year expectations for business wireline EBITDA decline are in the low double-digit range, indicating moderating pressures. Management's forecasts and outlook. Full-year guidance reaffirmed consolidated service revenue growth in the low single-digit range and adjusted EBITDA growth of 3% or better. Free cash flow maintained full-year free cash flow guidance in the low to mid-$16 billion range, with approximately $4 billion expected in the fourth quarter. Note, a $500 million legal settlement will impact Q4 free cash flow. Capital investment. Full-year capital investment is expected to be between $22 billion and $22.5 billion, implying Q4 investment of roughly $7 billion to $7.5 billion. Adjusted EPS reiterated full-year outlook of $1.97 to $2.07, with expectations to finish closer to the high end. Long-term outlook expects to provide an update to the long-term financial outlook early next year, incorporating the accretive benefits of pending acquisitions. Significant risk factors and considerations. Competitive wireless environment. Acknowledged elevated switching activity and increased costs of acquiring and retaining subscribers. Management believes their strategy of focusing on converged customers will mitigate these pressures. Fiber build competition. While AT&T is aggressively expanding its fiber footprint, the market faces significant investment from other players. Management emphasized their scaled build engine and market penetration strategy as key differentiators. Legacy infrastructure transition. Continued efforts to transition away from outdated copper networks and legacy services present ongoing challenges, but also opportunities for efficiency. Macroeconomic conditions. While not explicitly detailed, broader economic uncertainties can impact consumer and business spending. Regulatory environment. While generally viewed as supportive of investment, evolving policies can always pose potential risks. Key statements from CEO John Stankey. We had another solid quarter and remain on track to achieve this year's consolidated financial guidance. In consumer wireline, the scale we have achieved as a nationwide provider of home internet services through our significant investments in fiber and 5G is proving to be a winning play. We achieved our highest total broadband net adds in 8 years. Our success with convergence also extends to fixed wireless. More than half of our Internet Air subscribers also choose AT&T Incorporated for their wireless service. Our goal is to become the best advanced communications provider in America and to lead our industry in share of retail connectivity service revenue by the end of this decade. The EchoStar spectrum we agreed to acquire will improve our 5G wireless performance in a cost-efficient manner while allowing us to grow Internet Air at a faster pace. As I've said before, where we have fiber, we win. With both fiber and 5G, we plan to win even more. The opportunities ahead of us are in our control, and I wouldn't trade our assets and position for anyone else's in our marketplace. I think the answer to the question is we're well positioned for a competitive market. I would describe what's going on in ARPU more as a feature, not a bug. We have all the assets in front of us. We've run the plays that we need to run to be successful over the next 5 years, and everything that's going on outside of our business right now is external and distraction. Our job now is to organically invest in this business and make it a better company, operate better, serve customers better, become more efficient, and put a nail in the coffin of the legacy infrastructure that we have. The LEO technology is really exciting technology. I think it's going to be fantastic for consumers and businesses. Key statements from CFO Pascal Desroches. At a consolidated level, total revenues grew 1.6% year-over-year. Adjusted EBITDA grew 2.4%, and we expanded adjusted EBITDA margins by 30 basis points. Third quarter free cash flow was $4.9 billion versus $4.6 billion a year ago. I'm really pleased with how well the team is executing and remain confident in our ability to deliver on our full-year outlook for mobility service revenue growth of 3% or better and mobility EBITDA growth of approximately 3%. Customer demand for our leading home internet offerings is growing as we reported strong gains in both fiber and Internet Air customers. Based on this solid execution, we continue to expect business wireline EBITDA pressures to moderate versus last year, with a full-year decline in the low double-digit range. Overall, our third quarter results showed that we're executing well and are reiterating our full-year financial guidance. We had an opportunity to settle some out-of-pattern legal settlements that will impact our fourth quarter free cash flow by approximately $500 million. When you look out over the next several years, we are working through several transformations, all of which will continue to drive overall efficiency. Over time, the more convergence we drive, the overall churn should come down. As a result, the efficiency of our acquisition spend should also improve. Candidly, we tend to over-index on the higher ARPU continuum. In order to grow service revenue, we have to be willing to also target other places where we're underpenetrated. As John effectively laid out, that is a part of our strategy. Overall, when you're managing a big base of customers, like we are, it's important that we try to expand the base as well as over time drive more value by giving the customer more and driving more overall top-line growth. The mobility attachment associated with that currently across our footprint, we are at 50%. We're better than 50%. In summary, AT&T delivered a strong third quarter of 2025, marked by robust broadband subscriber growth, steady mobility performance, and progress in their strategic shift towards converged services. The company reiterated its full-year financial guidance and expressed confidence in its long-term strategy to lead in advanced communications, driven by ongoing investments in fiber and 5G. Management emphasized internal execution and organic growth as their primary focus moving forward.